It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, January 13th, 2016. Hump day here for our nightly newsletter. Got another jam-packed newsletter in store for you. Boy, how about those markets today? Lots of volatility, lots of tradable opportunities here this morning. Boy, oh boy, the action just is not slowing down here in this new year of 2016. All right. Tonight's newsletter, crude oil is bearish after collapsing off the highs of the channel. So our plan is to continue looking for selling opportunities as we attempt to complete the rotation back down to the lows. Got a really interesting chart to look at tonight for the oil market. Even the S&P is bearish this evening, just a little bit bearish. We had a parabolic three-push move lower today, which ended in a short-term trading range. So our plan is pretty simple. Fade all the corrections higher until we see the buyers start to gain some sort of traction. I think the gig is up on the S&P 500 right now. I would expect to see some attacking going on tomorrow. How about the gold market? The yellow metal is bullish this evening, but hold on. After a spike in channel broke, retested, and snapped back higher earlier in the session, we know the buyers are going to need to hold the next pullback, or this price is going to potentially run all the way back to those lows. It looks bullish on gold right now, but look closer, and we're going to take a look at that in a second. Euro is bullish this evening as well, very similar to gold, but today's move finished up at the 50% retracement of this week's move down, and the final candlestick on the euro this evening leaves us with some big concerns. This move might be over. We got a good plan for crude, even the S&P, gold, and the euro. Some quite challenging scenarios tonight. This is going to be probably one of the most challenging newsletter charts or sessions leading into tomorrow that we've seen here in 2016. I'm looking forward to going over with you guys. Before we jump into our charts for tonight, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, not to worry. It's a link in the description of the YouTube video. And that'll take you over here to our trading blog. A couple of reasons why. First of all, I would love to invite you to come out and join our live trade room as a guest for a day, maybe 2 or 3 days. If you're not a member of School of Trade and you'd like a free pass to attend our trade room, grab that free pass in the upper left-hand corner. In the lower left-hand corner, you can register for our nightly newsletter mailing list. All I need is your name, your email, and then verify your inbox right when you press the submit button there, and then I'm going to send you an email every evening conveniently when the newsletter is ready to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. On the right hand side, you'll see a button over here to register as a trial member. Not the same as your free pass, keep that in mind, right? Trial membership, you'll learn all about how we trade, what it means to be a member, and of course, don't forget, we always have someone standing by 24/7, 365 to give you guys a hand. Hope you guys are enjoying the newsletter so far this week. It's been a busy week this week. Boy, a lot of chaos out there in the markets, and I'll tell you guys exactly what I told a good friend of mine last night. He was asking me what to do. I said, look at the chart. The chart's going to tell you what's going on. Turn off the news. They have no idea what they're talking about, right? We're looking at the chart here, and the chart makes perfect sense. Now, before we jump into today's charts, though, I do want to remind you tomorrow's Thursday, January 14th. We are cruising our way through this second week of the month. We got a bunch of, not that much actually. I'll look closer at it. We get jobless claims tomorrow at 8:30. That's all you get to worry about here tomorrow. Got a lot of announcements here regarding fixed income and, of course, the Treasury bonds, the bills, right? All of those announcements tomorrow, late morning and early afternoon. All us day traders have to worry about for tomorrow really is that jobless claims report at 8:30. The jobless claims report is a Red Star news event. It's supposed to be a market mover, but you know, the jobless claim, it's been a few years now since we really stopped paying attention to the jobless claims report. Really, the most important jobs report right now is going to be the JOLTS report. And then, of course, we heard from non-farm payrolls last Friday. That doesn't mean we don't have to worry about it tomorrow. We will trade around that 8:30 a.m. news tomorrow, but that's all you got to worry about on tomorrow's economic calendar. Just be aware of that. Jumping into our first chart of the evening for tonight's newsletter, crude oil is bearish after collapsing off the highs of the channel. Did we not call that a mile away last night? I know, right? Pretty darn good session today on crude. We continue looking for selling opportunities now as we attempt to complete the rotation down to the lows tomorrow. Now we have a possible bear flag working sideways this evening, which tells us to look for opportunities to sell into buyer failure as it tries to test these overhead resistance levels. And then if we collapse back down, we're looking to sell those rips, sell those retracements with new lower lows tomorrow. Just make sure you don't sell into that low at $30 a barrel, right? So really right now, there's a couple key components here. We have this larger bear channel. We talked about this last night. Remember last night's newsletter? We were down here, and I said just wait for it to go up and then sell the high, and, well, you can see the chart for yourself. So we get the large bear channel here. Beautiful move off that high. Don't forget, channels like to rotate. We rotate from the low up to the high, back down to the low, up to the high, right? And now that magnet turns on down at that low, and we know that's where we're going to be targeting, right? On top of that channel rotation, we also have a major measured move coming down. We have a minor measured move coming down. I also want to point out as well that there may also be a bullish measured move going higher here, right? I want to be empathetic to both sides of this market. That puts us right about at the high of that range. I would not be surprised whatsoever to see them run this thing higher before it collapses back down, right? We always trust the candlesticks, and we always wait for proof. So this market can go anywhere it wants tomorrow. We're definitely going to be staying on the bear side until something changes, though. So first things first, bear channel. Second thing, measured moves. Here's kind of an interesting scenario here, right? Today's news candle, right? That big fat red candle on that chart. That's the inventory report number. That's the big news candle, right? The candlestick that reacted to that news. That oftentimes those big candles, they break into flags, they break into spiking channels. Now, if you looked at this on a faster time frame today, this was a spiking channel down that already broke and retested, and we're trying to make that next leg down, okay? On another way of looking at it, though, you look at it as the flag pole and, of course, a bull flag. This really is not my favorite looking flag that I've ever seen, right? It may end up giving us a two-legged correction here before we get that next leg down, right? So I see this in a few different ways. I see it as, again, a spike down off that news into again, if you look at it on a faster time frame, this was a very steep spiking channel down that broke, and just like it should, retested the base of that channel, and then now we're trying to make that move down, right, to complete that medium term A, B, C, D. Let's play that game, what if price goes higher, what if price goes lower, right? That's going to help make some sense out of what to do next. Now, we know the direction, right? The bias is down. We're looking for channel rotation all the way down. Once we get down to that low, then we'll look for the rotation back up to the high and, rinse and repeat over and over again. Now, here we are just above major support at 30.44. What if price goes higher? Well, if price goes higher, we're undoubtedly going to run right into resistance overhead. Price runs higher, we're looking for failures. Buyers when they buy their pullbacks. If they fail, we're looking to sell it. If it goes even higher than that, let's be honest, it can keep going higher. A lot of bears in the market probably taking their profit right about here. If you got short up here, though, your stops would definitely be hanging out way up here. That's another option for those bulls. But bottom line, though, is as it goes higher, the smart sellers are going to wait for the buyers to try to buy the pullback and fail. No matter how high it goes, right? Buy the pullback and fail. So what I'm looking for here is, like I said here, opportunities to sell into buyer failures. That's what I'm talking about, right? So as price goes higher, we look for failure opportunities up at the highs. Basically, we're looking for failure opportunities at any of these resistance zones overhead. It's very difficult for me to tell which one will hold, right? They may not hold. Who knows? We'll look for proof tomorrow. The next thing is, what if price goes sideways? Right? What if we end up going sideways? If we end up going sideways, this potentially turns into a trading range, oftentimes with such a strong push down, right? The bulls are pinned to the floor, right? The bears, they already got into this move. So the only way the bears get more is if it goes higher, right? Then they sell it. So a lot of times, and we're seeing this in the S&P right now this evening, strong push down. It looks like a flag to me, but it may end up kind of going sideways here. If it ends up going sideways here, whatever you do, don't sell into that low, right? If it goes sideways, what you want to do is you want to look for, obviously, sell the high of that range, right? If it does go sideways and goes into a trading range, you want to sell the high of the range. But more importantly, if we don't get to the high of the range, okay, here's what you're going to be looking for. We spike down, and this is actually a really good example for something we're going to talk about on the euro. I think it's the euro. Yeah, the euro in a second here. Was it euro? No. Yeah, euro and gold. Anyways, back to the plan. So if we do go sideways here, this is a bearish bias leading into a trading range. Okay? Just like a channel, we expect rotation. So if it goes back to the high, then we look for buyer failure at the high, and we look for a chance to sell the high using buyer failure. But let's go back for a second. What if we can't get to the high? This is where the 2-try rule comes into play. I'm going to give those buyers 2 tries to get back up to that high. Once, twice. If they can't get back to the high here after trying twice, now we start aggressively looking for buyer failures to sell. Really, the only thing we can't do is sell into the low. But if we see them try and fail, they try twice to get up to the high of that range and they fail, we're now going to make a run at the range expansion level projected below. Ready? 1, 2, 3, now back to the chart. Here's that trading range. And would you believe me? Is it a coincidence? Take the size of that range, project it down, right at that measured move. So here's a scenario you're looking for. Here's the ideal scenario. We go up once, we try twice, we can't get to that 31. Sellers will attack, buyers will retreat. The buyers, heck, they're smart. They're going to join the sellers and look for this price to go lower. All we have to worry about, though, is again, be careful selling directly into these support levels. That's really the only thing that I've got to warn you about if it aggressively collapses lower. That leads me into the third scenario. What if price goes lower? Well, if price goes lower, we're selling retracements, but as long as we don't sell into this support, I would imagine there's going to be some stops down here. There's going to be a little bit of shenanigans in around that $30 a barrel. If you've listened to my newsletter, you've heard me say this many times before. Rather than selling the low, wait for the buyers to buy that low. There will be buyers that buy the low. Then wait for those buyers in the short term to fail on the pullback and then sell into that, right into that failure. What this does is that technique allows you to sell short in a moving market lower, but not selling at the low, right? So let somebody else sell the low. It almost always fails. There's always an exception to that rule, so don't be surprised if it just collapses. Remember, I can't predict the future. All I know is where the reliable trades are going to be. That's all we can do as professionals, right? I can't predict what's going to happen at 30. It may collapse, but chances are it won't. Chances are buyers will be there buying that low. It will shoot back up, stop out some of those weak sellers who tried to buy the low or tried to sell the low. The buyers will think this is a good pullback to take, and now I've got myself room now, right? Now I have a little bit more room now that I can get into a trade short, put a nice quick first target, and then try to hold the rest of it while we finish up that measured move. It's always a bit of finesse going into selling near the low, unless, of course, we have just a tremendous push lower. We're going to see that tomorrow in real time, and we'll attack right along with it. This is going to be a really interesting session tomorrow. Either we push higher and fade the move higher, we go sideways and look for the 2-try rule, or we push lower and do not take the bait selling the low, wait for the bounce up off that low and fade the bounce. That way you've got room, right? So you're not selling directly into that low. Now, the chart of the night, the E-mini S&P. Boy, as you can see, I'm reaching here. You know, I kind of had to go out on a limb that we really don't have much. This is a very challenging chart. And that's why I said in the introduction tonight This is probably going to be one of the hardest days tomorrow to anticipate of the entire year 2016. I realize we're only 13 days into it, and it's been pretty damn easy so far. All right, bottom line is S&P's bearish, just a little bit, right? This is a parabolic move. Now, ever heard anybody say that before? What's a parabolic move? A parabolic move is a move that gains slope, right, or gains momentum. Okay, so look at these two lows, and then look at the next low, right? See how it gains that steepness, right? That's a parabolic move. It's a three push pattern that gains that sharp, right? It bottom line is it gets steeper, right, as it goes, almost as if to fall off a cliff. Now, most traders, when you see a parabolic move, it's seen as a big gift from the market. Nice big bow right on top that says, here you go. Here's an extra couple $1,000 in your account that you probably weren't expecting today. Most people are going to look at this and say, oh my goodness, let's take some profit. And so, of course, they did, right? They see that parabolic move. They take their profit. But look at this, right? Almost as if to throw those bulls right back on the mat and say, who told you could get up off the mat, right? They hold the moving average. This never happens. I mean, you very rarely see this happen. Usually what happens is it'll go through that moving average, right? The buyers try to hold the pullback. It can't hold the pullback, right? And it collapses back down. I mean, this is pretty impressive. This is pretty impressive. And that's what leads me to believe tonight the gig is up, right? The gig is up. I mean, you've got central banks talking about it. You've got asset management firms. I mean, not that you can trust anything on the internet these days, but we're seeing announcements from major asset managers saying don't buy anything, sell everything. Are you what? What? Something is really wrong when investment banks are saying sell everything you got, right? That's like me owning a nightclub and saying you should probably go to bed early tonight, right? No. Don't come out and buy beer, right? Go to bed, get some sleep. This is, you know something's up here right now, right? So bottom line is, I don't care about what they're talking about on television right now. The chart screams bearishness. Now, we have to admit, though, with such a strong move down, there are going to be buyers that say, it can't keep going lower forever, right? I'll be a buyer here. There will be some bargain hunters here. So we have to anticipate that. So basically, the bottom line is, we don't have a lot of technical clues, okay, to work with on today's chart. Just a straight move lower into a range. This type of strength will have those buyers on the ropes and sellers will attack, which means we will look to fade all pushes higher and sell retracements with every new lower low until the buyers can hold a pullback. Okay, repeat after me. I will not be a buyer until I see the buyers hold a pullback. What do I mean by that? I mean, you got to literally see the buyers get a new higher high and hold the pullback to a moving average. They've got to be able to show us some proof. Until that happens, you sell everything you can possibly get your hands on. Just don't sell into the low, right? That's the only thing I can, like I said on crude oil, it's the only real advice I can give you, right? So the most important thing is, if we're at the low, I'm very hesitant to tell you to sell the low. What we'll be doing tomorrow is we'll be watching the price action as it goes to those lows, assuming it goes lower tomorrow. And we'll be reading that tape, we'll be reading that price action to see how aggressively they're attacking the low. If we see strong closes into the low of day tomorrow, we're going to know it's okay to sell into the low. But it takes a skilled eye of reading those candlesticks. So make sure you come out and either join us or make sure you're careful tomorrow if you're selling into that low. The best way to do it is every new low that we get, wait for the bounce off that low and then fade it back up. Right? Then, like we talked about on crude. So every time it goes lower, wait for the profit taking. Okay? Wait for the buyers to try to buy it and then sell it right back in. As it goes lower, you're selling retracements. As it pushes higher, if they hold the pullback, then we wait. If they can't hold that pullback, again, fading everything they've got. And really, for the most part, if it continues this aggressively down tomorrow, you're probably not going to get chances at this, but we really want to focus on these resistance areas overhead, right? That would be ideal, but oftentimes in these real strong markets like this, we don't even get a chance. Under normal conditions, I would say wait for this price to go up and then sell it back down. But heck, I mean, we've seen this a lot so far this year where the rational market goes higher, right? Can't hold the pullback, and then we sell it, kind of like what happened on crude right today. But boy, if it just tumbles lower, you know what's going on, right? You know they're not letting the foot off the gas pedal. They're holding the moving average here, and we're going to keep selling retracements. We're going to keep fading all the moves higher until we see those buyers hold that pullback. We have a huge level of support down at 66.75. This is a major unfilled gap from about, August, September, over the summer, right? So we got a few months ago. That's going to be our number one priority tomorrow. If we get to that quickly, expect a trading range tomorrow, right? If we get down to that 66.75 quickly, I would expect to see some sideways chop and slop here. There will be long-term buyers defending that 66.75. Again, the ideal scenario is we go up and we can sell into the failure. If we break down, be careful selling those lows, right? If we break down, look for price to bounce off that low and then sell into those short-term retracements, right, as you come up off that low. That way you've got some room so you're not selling into the low. And then if it really turns into a bloodbath tomorrow, sell it, sell it, sell it, sell the close of red candles, sell green candles, sell anything you can get your hands on if we do see the bloodbath continue for tomorrow. Again, I'm telling you once again, what should happen tomorrow is we should push higher on profit taking, on bargain hunting, but the way this year has gone so far, we may have to put on the hard hat tomorrow, right? Hands on the wheel, and we may have to steer this thing right into those lows as we go down to that 1866.75. The gig is up. I don't think anybody in there, I don't think anybody's going to be trying to buy that thing right now. So we know what to expect tomorrow, and we know what the plan is if we get it to be pretty aggressive tomorrow. Next up here, and again on the S&P. Don't forget, if you need help on that, come join me tomorrow. I'll be watching that live in real time. Gold. Let's talk about the gold. Now, the gold and the euro are very similar. They're very similar. They're a bit ugly, and they appear to be in correction mode right now, both the gold and the euro. Let's take a look. Gold is bullish this evening, but after a spike in channel broke and retested earlier in the session, we know the buyers, they need to hold the next pullback, or this price is going to want to run back to the lows tomorrow. The big picture says this is just a retracement off this week's bearish trend, right? If you look at the big picture, you zoom out here, you can see we are just smack into a 50% retrace right now. We've got some major resistance here at 96, at 97, right? We get some definite major resistance here overhead. Okay, so big picture says we are in a retracement area. In the short term, though, you can see we're up at the highs of that major bull channel. Couple key components here. We have this kind of sneaky bull channel here. You'll notice you line up the lows, right, project to the highs, and you can see where we are up at the highs of that channel. Now, if you were a buyer, would you want to buy here? No, right? If you're going to be a buyer, where would you want to buy? You'd want to buy down at the lows. So if I put myself in the eyes in the shoes of the sellers, right, we're already up at that 50% retracement, right? So long-term sellers are going to start getting in short here. If I was a buyer right now, where would I be looking to buy? I'd be waiting for a channel rotation, look to buy that low. I certainly, if I was a bull on gold, would be very hesitant to buy this high, right? I'd want to buy it on a pullback. Now that pullback is going to have to hold, and here's the catalyst. Here's what gives this market a sense of urgency. It's the spike in channel. We have a completed spike in channel already. It doesn't look like it, but if you look closely, spike up, channel, and look what happened. Remember, spike in channels, they're strength patterns. We pulled back, and look what we pulled back to. We basically retested the base of that channel, and then look at the size of this green candle. Right? The size of that green candle tells me that sellers exited and buyers attacked this. Well, they ran it all the way to the high of the channel, which tells me that most of the buyers are already in this move. If they're not taking profit, they're holding, and that means the only way to get more buyers interested right now is going to be a pullback. right? If you were a bull, what would attract you? A lower price, especially if you're already in this move going higher. That's why it's so important right now that these buyers hold this pullback. What I would anticipate for tomorrow is buyers see where they are in the big picture and the short term, right? Both at the high of the channel and at the 50% retracement. They wait to buy the next pullback at that lower end of that channel, and that's where sellers will be looking for them to fail. In my opinion, we could see a big run tomorrow on gold. We have a major resistance area. We got some unfilled gaps from a few weeks ago at 1096. I could easily see us filling that gap, pulling back to that channel low, failing at that low because, again, we're in a long-term bear trend here, and then finishing by filling the gap all the way back down at 1078, which we barely missed earlier this week. So a very interesting, what I think to be a very challenging environment for analysts on gold right now, just because you got literally two sides competing against each other right now. Sellers are engaged in resistance. Buyers got to take their profit here. If you're a bull right now on gold, wait to buy that low. If you're a bear right now, in all reality, you can start selling as soon as that first pullback fails. Right? So sell into buyer pullbacks there, right? Sell into failures there. The only thing you got to worry about is just don't sell into this area right here at 1086. Right? You're going to have more buyers entering the market there. So just wait for the buyers to buy and then sell right into their failure. And of course, the failure target waiting for us. We have a whole cluster of support areas waiting for us to the downside. Very interesting scenario here on gold. And you're going to see another interesting scenario here on the euro. The euro is very similar. A little bit different, but very similar here on the euro. Looking at the euro is bullish this evening, but today's move finished at the 50% retracement of this week's move down, right? Look left. We are smack right into that 50% of the move. Same thing, just like gold. Okay, so we know we've got some major resistance here. And look at this final candlestick from today's session. The final candle in today's session does not give us a lot of confidence for these bears, right? For the bulls. It looks like they just gave up on it right at the end, took their money out of this market and walked away. And then it looks like right now you're getting some possible late adopters of that bullish trend. So the big picture tells us this is a test of the 50% level from this week's big push lower, while the short term shows a bull channel and a trading range with the final candle looking very weak today. The channel tells us to expect rotation back to the highs, while the range tells us to wait to buy the lows, so we need to stay patient to see if we can get back to the lows and then look for more information. So kind of play that game. What if price goes higher here? If price goes higher, we're going right into resistance. This is going to be tough stuff here for these buyers to get back up to the high of that channel, right? You'll notice here we have that A to B, and then of course C to D. Apparently I missed that final target up there for that measured move, right? That puts us up top now here for that measured move all the way up the highs. Right, so measured move now puts up around that 9,400. Okay, that also sends up the high of that channel. So buyers now are literally swimming against the current, trying to get up to the high of that channel. I think it's a smart idea to look for them to fail. There's a lot of reasons why these buyers are going to have a hard time doing this. Now, obviously, anything can happen. So if we do make it up to the high of that channel, then sellers will look to sell it back down to that low. Buyers look to buy it back up to that high. One very important clue, the trading range. Okay, this is one of those untested range highs, right? We rotate from the high down to the low, back up to the high. Another reason why it's very difficult to be a bull right here, right? What I'd rather do is, if I'm a bull, is buy after the pullback back down to that range low. That's going to be where you really want to be a bull. That'll be the most reliable area, right, for all the buyers out there, right? So let it pull back down to those range lows and buy those range lows. as it rotates back and forth inside that trading range. Okay, so if price goes higher, be careful, right? Be careful buying up here. You're going into a lot of resistance. If price goes lower, that gives me a much easier job now to buy those lows on seller failure. Then I have plenty of room now to go back up to that resistance. We also want to consider that they possibly will fail, right? If we go lower here and they fail to rotate lower, they try once, they try twice, that's a huge bullish clue because now we have a failed two-try rule, right? Trading range rotation, two-try rule going lower. Let's say they go higher, right? They break out of this range. We see one push higher. We see two pushes higher, two-try rule. If they fail, we fade it back down. So this trading range combined with that overhead resistance makes it very easy to be looking for failures. Once again, if we go higher, give them one try, give them two tries. If they can't complete that measured move, sell it right back down into that range, right? If we go lower, give them one try, give them two tries. If they can't get down to test the low of that range, that's a bullish clue by itself as well, right? If we get down to the low of that range, we test that low, we're looking to buy back to the high, then back to the low, then back to the high. There's definitely a bullish bias to it, so buying the low definitely has the edge. And if we break to the downside, one, two tries to go lower, we can fade that breakout, buying that low as well. All right, guys? A very complicated scenario right now on the euro. Both the euro and the gold have a lot of options right now. Be careful being a buyer up at these highs. I'm tempted to say skip the buy side as it goes higher, right? Wait and see if it gets that second push. If the second push looks strong, then you can go with that second push. If the second push looks weak, though, you know where we're going. We're going to go hunting for that range low, possibly collapsing all the way back down to that range that we saw earlier in today's session. All right, guys? A challenging scenario for tomorrow. Remember, we always like to find those most reliable trades. Right now on crude and the S&P, they're relatively easy. On the gold and the euro, well, as I said, we're bullish, but we're running right into those overhead resistance areas right now. So tomorrow, I'll be staying patient and looking for those buyers to fail on those two tries as they go higher. Don't forget, before I say goodbye tonight, once again, don't forget to share this information with a friend. Right? Don't keep all the great info to yourself. Give me a thumbs up on the YouTube channel. Send me some feedback. My email address is jj@schooloftrade.com. Join our free trial on our website here at schooloftrade.com. And don't forget, we've always got someone standing by 24/7, 365 to answer all your questions. I've taken up too much of your valuable time this evening. Thanks for being here. My name is Joseph. Same time, same place tomorrow. Trade room opens at 8 a.m. Newsletter goes out tomorrow evening around 8 p.m. Eastern time. Be well out there. Be nice to each other. And be here in the mañana. Adios, amigos. Bye-bye for now.